All right, so we're going to cover a couple of other ones that you may see and you may encounter in your practice, and that has to do with the 1099-C and 1099-A. Cancellation of debt is where these usually come from. So we're showing you these, and I know we're going to just kind of talk about them. Again, the manual has a lot more narrative as well and has a bit more to do with these. We do see a lot of 1099-Cs over the past few years just in, say, preparation practice. In many cases, people become underwater on their mortgages or have had debt canceled. Cancellation of debt, we know, results in ordinary income, income from the sale of assets, or both. The rules regarding those different situations where cancellation of debt income occurs, they're extensive. A lot of that, it's beyond really the purpose of this course. Is we're just kind of telling you where to put things and how to report these. But each individual situation, of course, is unique, and analyzing that carefully. The new thing that's announced for 2018, and this is kind of a newer trending I'm seeing with all these other forms. We said the 1099 miscellaneous is the most common, and absolutely, hands down, it is. As we look at a lot of these other forms we'll be going through, there's not that many reported in comparison to the 1099 miscellaneous. So what they've done for 2018 is copies B and C, they've now been made fillable online for furnishing statements to recipients and retaining in your own files. So they're trying to make it a little bit easier. It could be in the past that you had to order these forms, from office supply store or from the IRS or what have you for all copies. But now the only ones we really have to worry about are the red line forms that have to be scanned by computer, being done in a very specific format. Your copies B and C, which is like the copy to the recipient, the copy for yourself, they're now fillable online. So again, in the manual, there's links how to access all these, but that is at least one nice development that we can do. Generally, lenders or creditors are required to file these, and there has to be an identifiable event that occurs in order to trigger reporting a debt cancellation. Also, if it is in connection with foreclosure or abandonment of secured property, it's not necessary to file both the 1099-A and 1099-C. So that is just, sometimes I see that, and it's not that even all these really big companies maybe understand always perfectly all the rules, but it's not necessary to file both if that identifiable event kind of makes it seem like you would be reporting both. So the nice thing, again, is it has the fillable copy B and C online, and a lot of these you're going to find there's a lot of instructions to it that you'll be able to refer to. Just in the interest of time, we're not going to go through a lot of these, are a little more obscure, but you'll find there's instructions to the creditor. So this one talks about creditor and debtor. So I said sometimes it's like it subtly changes, but our demographics are the same way. This is the person who's creating the form. That's the creditor. The debtor is the one who's had their debt canceled. And again, the same rules apply. You want your ID number to match the name and that all this to be correct. The account number is more to help to identify, let's say that you have a debtor who has more than one account, it's to help uniquely identify that one. And then all the information to the side is talking about, what was the date, how much was discharged, is there any interest included? And this is one of those exceptions where I said normally box 4 is when we've had tax withheld. In the case of a cancellation of debt, saying, hey, we're just going to forgive this debt, but it's going to generate income that you have to pay tax on, it doesn't have really tax withheld, so they reused box 4 for a different purpose. So most of these are for the most part, pretty self-explanatory, but you always want to go to the actual specific instructions if you need to create one of these forms. As we see them in practice, then it's more of the concern, does it have to be taxable or not? So we look at the 1099-A. That's similar. It's an acquisition or abandonment of secured property, but you shouldn't have the occasions where basically the C and the A occur from the same event. So a lot of the same exact, we talked about it, they may change the wording where it says lender versus borrower, or last one was creditor and debtor, but it has the same rules. This is the person creating it is the lender. The borrower is the one who's had that identifiable event. So here is, what was the knowledge of abandonment, what's the balance of that principal amount outstanding. These are often used in connection with homes or real estate is where you'll see it more commonly, but this can be not just real estate, of course. If we look at other types of common forms, there is the 1099 interest and the 1099 original issue discount. So as we're looking at those ones, the interest income, well, it's laid out the same way, except now it's back to payer and recipient. So pretty much our demographics, once you get used to that, and this even follows so much what we covered on the 1099 miscellaneous, because we have the FATCA filing requirement checkbox and the second TIN not, or that you don't want them to continue sending notices after you've verified. It's just jumping around a little bit there. So here we have that it's a lot of different types of interest that we see on there. So a lot of these, when we're looking through the instructions, one of the things that all of the instructions refer to is the general instructions. So general instructions, when you go to the manual, it's like the first link we give you there. And then the specific instructions, because each form can have specific instructions. The thing that's kind of funny, and this is just like giving you a heads up, all these forms have like on each of the different copies, like instructions for the payer, like little abbreviated instructions for the recipient, but all of them refer to URLs that unfortunately point to the 2019. So I don't know why in their own, like what would appear on the back page of each of these, why they haven't updated that. But in the instructions in the manual, I've given you the right links to get to those. And that we do have to use for the 1099 interest for the last ones, the 1099C, the 1099A, all the red line forms. We'll talk about some other ones that are used so rarely that we really don't even have to use the red line forms anymore. But the nice thing is all these, you'll see that they have it where you can file your B and C now online, but this is the copy A. So copy A, what they're talking about, if you look on each of the forms, it'll say, who is that copy for? Well, this is to the IRS. This one has to be on the red line form for the 1099 interest form. And all these, when you're furnishing your copy B, so it may be, really nice and easy if you have just a couple and you want to go online and fill out that to give to the recipient, those have to be provided to the recipient by January 31st. Here, because it's not that fun, box 7, non-employee compensation, you have until February 28th of this year that you can file paper, or if you want to file electronically, normally it's March 31st, but because that is on a Sunday, I believe. But anyway, the due date's actually April 1st if you're doing it electronically. Now, if you're doing it electronically, you do have to go ahead and file according to the instructions for, if you look at our publication 1220, we cover a lot of that in part 1. But it does give you a little bit more time to file these out. So if you receive, let's say, mortgage interest in the course of your trade or business, you might have to report that instead on a 1098. So there is an occasion where it's not interest in the sense of this form. It might have to be reported on a different form. That's a mortgage interest statement. So that is that it's not a 1099 as part of the number, but generally speaking, it's some of our information reporting forms. So don't report mortgage interest to the payer on the 1099 interest. If you have a foreign recipient, if the recipient's a non-resident alien, you might have to report federal income tax and report that on a different form in there. So if you notice here, box 4, federal income tax withheld, that's for everyone else. Now, if it is a true foreign, like a non-resident alien, you have to do that a little bit differently. So that's just some of the highlights of it. Most of this, it depends on what kind of interest you're paying. For the most part, if it's in a trade or business, you might still have some 1099s. Let's say for a loan that the business has to an individual even, it's box 1 that you'll most often see. Most of these others have to do with a lot more investing sort of activities, but again, you may have an occasion to need to report that. As we look at the next one in line, the 1099 OID, original issue discount. Again, for 2018, I'm super glad they decided to go ahead and do this, but we have an online PDF fillable copy B and C for that. But the copy A, the one to the IRS, they still have as a red line form for this particular one. So it is payer and recipient is the terminology, but everything kind of still is in the same order. You'll even see here it's the same sort of fill, that once you get the hang of a few of them, a lot of that knowledge transfers all to these other ones in here. So this is to be sent by the recipient by January 31st and then filed by February 28th or April 1st if electronic. And again, if it's a non-resident alien, you have to deal with those a little bit differently. But if you have original issue discount items to report, Those are going to be on this separate form, the 1099 OID. And they're grouped together because the interest reporting and the OID are similar in a lot of those investing sort of activities, but they do carry two separate forms. So a lot of these are a specific type of an activity. It's not as catch-all as the 1099 miscellaneous seems to be ultimately.